Yes, man. What is going on? Let's kill these comments on Instagram. Turn off commenting. Hope everybody's doing okay.
We had an enormous economic recovery, but the minds of people had been so scarred, the memories. Parents told their children. 1929 became a symbol in people's minds. I mean, if you said 1929, it was like saying 1776 or 1492. I mean, everybody knew exactly what you were talking about. In 1929, my dad, who was 26 years of age then, was employed as a security salesman by a local small bank. He sold stocks and bonds, but he mostly sold stocks. And when stocks fall 48%, and you were selling them to people a few months ago, you really don't feel like going out and facing those same people. So I think my dad probably elected to do, as they say now, shelter in place, which means stay at home. And there really wasn't that much in our house. We just had a small yard. It was wintertime anyway. My dad wouldn't have been puttering out of the yard anyway, and there really wasn't, the television wasn't there, and he and my mother got along very well. So under those conditions, I was born about 9 months later, so I didn't notice at the time that the market was closed. But the stock market had actually recovered over 20% during that 9.5-month period or thereabouts. People did not think in the fall of 1930, they did not think they were in a Great Depression. They thought it was a recession, very much like had occurred at least a dozen times, although not always when stock markets were important. But we'd had many recessions in the United States over the time, and this did not look like it was something dramatically out of the ordinary. Actually, for about 10 days after my birth, the stock market actually managed to go up all of 1 or 2% there in those 10 days. Well, from that point, the stock market went from level of 240 to 241, which was a noticeable decline, because if somebody had given me $1,000 on the day I was born and I'd bought stocks with it and bought the Dow average, my $1,000 would have become $170 in less than 2 years. That is something that none of us ever experienced. That we may have had it with one stock occasionally, but in terms of having a broad range of America marked down 83% in 2 years, and marked down 89% of the peak was in September 3rd, 1929, was extraordinary. And in that intervening period, less than 1 year after I was born, just slightly less than 1 year, my dad went to the bank where he worked and had his account, and of course the bank had a sign on it closed, and so he had no job. He had 2 kids at that point. His father had a grocery store, but Charlie and I both worked for my grandfather. Charlie worked there in 1940. I worked there in 1941, so we didn't know each other. But my grandfather said to my father that, "Don't worry about your groceries, Howard." He says, "I'll just let your bill run." That was my grandfather. Not exactly. He cared about his family, but he wasn't going to go crazy. And one of the things, as I look back on that period, and I don't think economists generally like to give it that much of a point of importance, but if we'd had the FDIC, the FDIC started on January 1st, 1934. It was part of the sweeping legislation that took place when Roosevelt came in. But if we'd had the FDIC, we would have had a much different experience, I believe, in the Great Depression. People blame it on Smoot-Hawley, and there's all kinds of things, and the margin requirements in 29, and all of those things entered into creating a recession. But if you have over 4,000 banks fail, that's 4,000 local experiences where people save and save and save and put their money away, and then someday they reach for it and it's gone. And that happens, in all 48 states, and it happens to your neighbors, and it happens to your relatives. It has to have an effect on the psyche that's incredible. So one very, very, very good thing that came out of the Depression, in my view, is the FDIC, and it would have been a somewhat different world, I'm sure, if the bank failures hadn't just rolled across this country, and the people that thought that they were savers found out that they had nothing when they went there, and there was a sign that said closed. So the Great Depression went on and lasted a very long time, but it lasted a lot longer in the minds of people than it did actually in its effects. World War II came along, and on sort of an involuntary manner, we adopted Keynesianism. We started running fiscal deficits, of course, that were absolutely huge, and took our debt up to a percentage of GDP, which had never reached before and never reached since. So we had an enormous economic recovery, but the minds of people had been so scarred, the memories. Parents told their children. 1929 became a symbol in people's minds. I mean, if you said 1929, it was like saying 1776 or 1492. I mean, everybody knew exactly what you were talking about, and it affected stock prices in a rather remarkable way. It was January 4th of 1951 that the kid who was born on August 30th in 1930 had finished college before the stock market got back to where it was at that earlier time. So take the years from 1920 or 1929 to 1951 and bear in mind that, the country was only 140 years old when this started. That's 20 years out of this amazing 231-year lifetime of our country. That was flat out a time for a long time of no economic growth and no feeling by people in terms about the wealth of the country, about what the American economy was worth, what all these corporations that were doing far, far, far better than they were long ago. But it took all of that time to restore in the market a price level that was equal to what it was when I was born 20 years earlier. So if you think about the fact that we're enduring a few months, and we'll endure many more months, and we don't know how it comes out, and people in the 30s didn't know how it was going to come out, but they endured, persevered, prospered, and the American miracle continued. But it's interesting in that at the start of 1954, the stock market the Dow was only at about 280. And I remember 1954 because it was the best year I ever had in the stock market. The Dow went from 280 or thereabouts at the start of the year to a little over 400 at the end of the year. And as soon as it went across 381, that famous figure from 1929, when it went to 400, everybody wondered, is this 1929 all over again? And that seems a little far-fetched because it was a different country in 1954. But that was the common question, and it actually achieved such a level of worry about whether we were about to jump off another cliff just because the 381 of 1929 had been exceeded, that Senator Fulbright, Bill Fulbright of Arkansas, who became very famous later in terms of the Foreign Relations Committee, but he headed the Senate Banking Committee, and he called a special investigation. He really was questioning whether we had built another house of cards again. And his committee, in March of 1955, with the Dow at 405, assembled 20 of the best minds in the United States to testify as to whether we were going crazy again. The Dow was at 400, and we'd gotten in this incredible trouble before, but that was the mindset of the country. It's incredible. We didn't really believe America was what it was. And my boss, the reason I'm familiar with this, was that I was working in New York for one of the 20 people that was called down to testify. And I remember, because Ben Graham was one of the 3 smartest people I've met in my life, and when he testified, the Dow at 404, he had one line in there right toward the start in his written testimony, and he said, the stock market is high. It looks high. It is high, but it's not as high as it looks. And since that time, we felt the American tailwind at full force, and the Dow, when we made the slide, it was about 24,000. So you're looking at a market today that has produced $100 for every dollar. All you had to believe in America, just buy a cross-section of America. You didn't have to read the Wall Street Journal. You didn't have to look up the price of your stock. You didn't have to pay a lot of money in fees to anybody. You just had to believe that the American miracle was intact. But you'd had this testing period between 1929 and certainly 1954, as indicated by what happened when it got back up to 380. You had this testing period, and people really, they'd lost faith to some degree. They just didn't see the potential of what America could do. And we found that nothing can stop America when you get right down to it. It's been true all along. It may have been interrupted with the scariest of scenarios when you had a war with one group of states fighting another group of states. And it may have been tested again in the Great Depression, and it may be tested now to some degree. But in the end, the answer is never bet against America. And that, in my view, is as true today as it was in 1789, and even was true during the Civil War and the depths of the Depression.
Man. Shit, man. I don't even want to mess up the man.
Every year, 40,000 people travel to Omaha.
Man. God damn. Man, that's the richest man in the world. And, I mean, it sounded like he was talking about today, right? Dude, that was so long. He was talking about a while back, man. And here's the crazy thing. Any moment in history, you could just give that speech. You get it? Like any day. And in his time, if you heard what Buffett was saying, that a kid who was born and then wouldn't see the stock market go up again until he graduated from college. It's like, damn. That was the Great Depression. And if you have my book, The Money Flow, in the very opening words, let's take this down. I don't know why it's so dark on Instagram, man. Why is it so dark, man? Why you guys got, what's wrong with you? I thought Instagram was the fun place. All right. Having troubles with my stand here. YouTube, what's up? We got 124 viewers on there. I don't know if you just came in, go back and listen to that. Find it on your own. I listened to that speech a lot. And you're like, what do you mean? Meaning I listened to the richest man in the world tell me what to do. I'm like, hey, I'm listening. What's up? And I've listened to that. Oh, I don't know. 1,000 sounds a lot. 100 doesn't sound enough. There's about 10 of those, man. And what he's saying, what Buffett is saying is that the American economy, he says the volume is low. Hopefully that helps. Your volume's low on your end. All right, man. You think I couldn't read the first time? You're going to say it a third time? I don't know which way I'm turning it by way of. Anyway, in the very beginning of The Money Flow, I want to say at the beginning of this book that I believe in buy and hold investing. I believe in the power of dividends to compound and build massive wealth over time. I own many stocks that I've owned for many years that I do not trade or sell shares. I just accumulate. This book can help you do that. It can help you pinpoint the perfect buying opportunity. The majority of this will discuss trading, but don't limit the money flow trading system to just trading. I'm just teasing, man. It's all right. Sometimes I'm like GP 2 times, like if I was in the mafia. We got Lefty Larry, Two Bats Gary. Everybody's got a cool name, man. I always wonder if I was in the mafia, what would my nickname be? I don't want it to be something like 2 times Lefty. And you go, why you call him 2 times Lefty? On account he says everything 2 times. Like, I don't want a weird name like that, man. Tommy Bats. Tommy Karate. Be smacking people. So, what Warren Buffett was describing there is that a general belief is that the American experiment is the most powerful economic system ever devised here in America. It comprises mainly, in what Buffett says in that speech, is that due to the FDIC, that changed the game going forward, okay? Because it gave a baseline protection. It's almost like a government put. Now, if you believe the government collapses, then I guess, yeah, the money flow ain't going to work. But in the meantime, what Warren Buffett was saying is that we got this little put in play, man. It's called the American experiment. And a lot of people, agree or disagree, but the government kind of just goes in and makes up shit, man. That's what and put protections in place. And what that did really at the end of the day was it caused each bank to have to be regulated, okay? And which put a base in our system in that there's you don't have to panic, like your money's there. Just that alone changed the dynamic of the stock market. But that time in history so scarred people, and I believe this because I've seen it where I was an adult in 2008. I was, what was I, 38 years old, and that's when the great housing, crisis and mortgages and banks and everybody was having problems. Real estate agents are going out of business, brokers are going out of business, banks are closing, massive foreclosures. Dude, I'm 38 years old. I got like 10 houses and a kid. And I'm like, what the fuck? What is happening? Like, 1 minute the stock market's killing it, flying. You can buy real estate easy, dude. And then you can't. And then it dries up. And then people start getting laid off. They can't make mortgages. They owe too much. They only put 3% down. Remember how that was a good idea, right? So when they blow out a lot more. There is no baseline. There is no FDIC, man. That's what happened. That's scarred. I would hear people ask me, so 2010, I'm buying houses. 2011, I'm buying houses. 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, buying properties. I try to buy at least one a year, and I try to buy stocks every day. Every day since 2003, if I could buy a share of something, that sounds like a good idea. And just fast forward that for 20 years, you accumulate a shit ton of money. That's what Buffett is saying. That the American experiment, at its core, you will not be a good investor if your core you don't believe in the game you're playing, man. But what we got to do is structure it and play around. We got to create some rules out of this shit so that we make proper investments. We need to put procedures in place to make sure the deal's good. And if it's good then, it's good now, right? And if things change, because they will, he says, because there's uncertainty, there's events we can't plan for, right? Oh, this is why we have to do it as wisely as possible, man. Also, if you listen in between his tones, there is no other game. It is these, man. There's own a business, invest in business, right? Own real estate. That's it, man. So if you're the little guy, you're like, what do you mean? You own a business, right? Business owners that make money make a lot of money. A lot of them go broke. But that is one way to make a bunch of money, right? Another way is to put a bunch of money in the stock market, and then you make money all the time. Meaning, look, there's shit like USA. You can just go in here and buy it, and if you had $100,000 of this stuff, it pays you like $1,000 a month. You're like, well, what if you had 5,000 in there? Or 500,000, pays you 5,000 a month. Well, what if you have $1 million in there? Pays you like 10,000 a month. What if you got 3 million here? 30,000 a month, doing nothing. So think of that. So if a guy's got money, plugs it into that. The rich. I mean, if you have money and you know what you're doing, you can just get unlimitedly rich. But guess what? The business still cycles. These prices come up and down, right? Different assets pay different things. That's what he's saying. That's the great American experiment. And there's the business cycle, 5 to 7 year periods. Talk about this and you don't have to die broke. You're going to invest inside of that. So what Buffett is trying to say is own shit you believe in. Expect the people that work there to do the best they can. And when given a chance by Mr. Market, accumulate more. Pretty simple. And just believe it's going to work out over time. Have faith in the system in the stock market, the system. Because if you don't have faith in it, then it won't work, man. It won't work. Or you're going to totally try, what are you going to do? Just play these sides here? I'm just going to buy here and get out here and buy here and get out here and buy here and get out here and buy here and get out here. Okay, you're going to do that over a long period of time, all your life, moving in and out, man? No, man. So what we got to do is recognize the volatility that's in the market, knowing that it's common. This is normal. Recessions are common. We've had, I forget the number of how many pullbacks. And if you're stable, you can use those to your advantage. You can use them to your advantage. And that's what this is about. And what we're seeing here is a crazy down move. That was our sell signal, right? That was our crossover. Here's our break above. See it? Right? 5-day 20 cross. We talk about this in the money flow. 5-day 20 cross in these zones here. And what that tells us inside the money flow is the trend direction has changed. And so we know whether markets are trending up or markets are trending down, the overall slope. What's the overall slope here? Down. Right? Higher highs. Or a series of lower highs, I mean. They're lower, right? Lower high, lower high. Overall, the trend is down. Inside of the trend, man, this is the magic, man. I saw this at a blackjack table. Years ago, I'd been trading and trading and trading. And I didn't really have a philosophy of trading. But as I'm trading, I'm sitting at a blackjack table. And everything that I talk about right here, it's in the newsletter on page, Page 10. It's basically money flow summarized. But it's like, I can just write 5-day exponential moving average, but what are we looking at? What does that mean? Why 5? Why not 4? Why not 7? Right? Why is it 5, 10, 20? Why are these exponential, but this is a simple? Why? And that's when you get into, that's what the book and course are about. RSI, support and resistance. So as I'm sitting there at that table that day and I'm watching, and this is USO, but we could change it with the SPY. Or that was USA, sorry. Check that fund out, man. Pays a nice dividend. It's leveraged to the stock market, which means it can go down. Pays a nice dividend, though. As we watch this, RSI went 29 on Friday. Zoom in. Price tagged literally where it stopped before. All the moving average pointing straight down. That's the S&P. We put in a stage 1 here. Tried. Even broke out, man. That's the Achilles heel of trading, right? Immediately turns. Now we know once this is broken, it's over. This breakout is dead. And now we're in full-blown stage 4 decline, and we've seen that. We were down that day. So we've had a whole nother week since the stage 1 up there was broken. And it came right down to where it stopped before. And it stopped. The RSI is 29. And we know, usually when the RSI gets that low, you're going to see price changes, Let's take that down. You're seeing bottoms. Not 100%, but it's just one of the signals. Like this general area is bottoming. Why? Because the RSI went extreme. So it's not the only thing I'm looking at, right? So when I'm looking at this, the snapshot of the money flow, it's like, okay, where are the 5-day and the 10-day? What's the spread between the prices of the moving averages? Is it huge? Is this thing blown open like a shotgun? Meaning the moving averages are just blown out there? That means you got a lot of time, man. Because price isn't going to do anything. It's going to come back together, man. So watch. Go back and look at the last run-up. What do you see? Price comes together. It gets blown down, and then you see this period where it comes together, man. And, can we determine this? Yeah, we do that with what we call the 4-bar count. I'm looking for a pivot point, meaning the lowest low. It's confirmed by the next day, and next day holding it. That tells me that's an anchor point. Now I'm looking for price to get above the 5-day exponential. Bam. Right in there tells me I could probably, if I'm trading, I can start looking at trading to the upside. If I'm an investor, I'm probably playing the bottom, at least of that move down. As an investor, if I believe in the market and believe in my stocks, then I'm just going to target these. Like, bring it down, let me grab some. I mean, what else are you going to do? Pay up here? You're going to pay when it's run up? No, man. So if I own Home Depot, the play on Home Depot since the fucking stock started was watch, pick up stage ones. And you're like, when you collect your money? When are you done? How long you want to do it? Time times amount times yield, but it's got to multiply, man. It doesn't say months times months times months. It says time times amount times yield. And the market's time's not your time, right? And we play what the market gives us, and you got to look at it and say, okay, what am I playing here, man? So as an investor, especially dividend stocks, if I can catch these bottoms, that's what I'm looking for, right? I don't know where the top, where the bottom is, but I know what bottoms look like. So if I'm watching, let's say Exxon, the last chance we had to buy this was right over here, right? And we had our bottom. This could have got you. See it? Candle. But look, the RSI is not extreme. Notice that? So if you remember, I said, I'm not adding in my buy and hold account. I haven't added oil in a bit. I mean, I just bought it at much more extreme prices. But trades, yeah, I'm willing to play a trade. And I can see it setting up. Tried to do it here. We didn't play that one. And the reason is oil had really run, man. It was just a call that had really run. Upside wasn't that much. But you could have. Then it comes down and holds it. And it did another one right here. Got a pivot point, 1 day, 2 day, 3 day, 4 day. Is it above the 5? No, it's not above the 5. Not above the 5. That could have bought. This was the day we bought, though. Because it started to break the box over here and then came back in. And I'm always talking about this thing called back in the box, meaning if I had a box started, I got an anchor point, I got 4 or 5 bars, and I'm looking up here. If this is extreme, I'm even more excited about it. If it's not extreme, I'm suspect about it. So as I watch it open, look, number 4 in the money flow relative strength index is set to 14 days, so I'm watching it. In other words, I don't trust a move if it didn't exhaust the move. You're like, why? Because I have the option not to. I'm not forced to do anything, man. The great fucking thing about stocks, you don't have to do anything, man. Most damage comes from doing too much, man. All you gotta do is be. You can own a stock, and just because it goes down, you don't have to add to it. Sometimes people feel compelled. Well, I have these stocks and I'm down. How can I add new stocks? It's because when it goes up 10, it don't matter if it was in this one or this one. You don't have to make your money back in the same stock right now. So I've owned Exxon for 15 years, which it's okay if I'd have skipped out on a couple years, which I did, where I just owned it. It went up, and it went down, and it went up, and it went down. And I'm not doing anything. Why? Because I wanted some of this. So don't get too beat up about that. And if you own all growth stocks, sometimes I hear people, I'm going to sell all my growth stocks and buy dividend stocks. And I'm like, okay. What if you'd have done that a minute ago? You sold your growth, then you bought dividends, and now dividends have pulled back huge. It's like, man, these things move up and down, man. That's what they do. So as we build these out, I think some of your best trades will come from watching your buy and hold positions. So you could easily get 10, 20 stocks with not much money. I had a lady today, Gerald, I'm getting back into trading. How much money do I need? And I said, well, are we trading or are we investing? Let's get real clear. It's like, well, I want to trade. Okay. All right. Then this I would have taken. I'm not investing in Exxon after it just hit an all-time high I will pick some shares up, maybe trade it, which I did, right? ERX, we traded it. And that's what insight into price movement and value will let you do. Just out of curiosity, I don't normally do this on Sunday. What is Exxon worth? Let's see, man. All right, look what Morningstar says. Exxon is trading within a range we consider fairly valued. I had quite a few people last, 2-3 months ask me, would you buy Exxon here? And it's like, no. Why? It's not on sale, man. Like, I'm looking for cheap shit, not expensive stuff. I already own it. I bought it when it was cheap, man. So I'm looking for, if I'm playing a cycle, then what I'm looking for, I'm trying, like, let's look at Home Depot. Ooh, look at Home Depot. So I'm just genuinely, when I first look at the chart, do I see, I can see it, but I don't know if you can see it, the flow. And it's like, all right, let's mark those little 520 crossovers for a second, right? We can just keep going back and doing them if you want. You see it gets jacked up in here, right? You still have them. Goes back. And all I'm really looking for, and I'm not even interested until this thing, in my opinion, is undervalued. Even as a trader, man, I like to have some kind of, you don't need it. I'm just telling you how I am. I like to trade little themes I see. So if I'm watching oil, or in this case it's Home Depot, well, that's going to tell me that maybe there's a trade set up in the housing stocks. Maybe there's a trade set up in Lowe's. Maybe there's other stocks in that Home Depot's trading with, and similar things in the economy affect those stocks. So I might be invested in Home Depot, but I can use that to launch off on trades. And over my trading account, I can be like, man, I want to play this. I want to play this for some quick money. So then you could do both, man. You're like, okay, am I buy and hold? I only want to buy it when it's on sale. You can buy it anytime, though. That's what Buffett's saying. Fuck, you can just buy stocks and hold them. You're going to be all right. Look at it. And we talk a lot. Wow, I got kicked off. And we talk a lot about that 200-day and how to use it with these dividend stocks. Look at that tag, man. Pow. Now look, though, it missed it over here. You would have traded your way out, though. When I do those, I'm looking for these stage ones, and my target is the 200. And if it comes into another one, I'll pick them up. There's an actual breakout, and then it hits it here. So in this trade, you had, and it's not a way normal people think of trading. You had 1, 2, 3. If you would have started it here. Now I'm going to be honest, I don't know that I would have started it there. That's not a big drop. Maybe I would have. Because if your first buy just hits, you had good problem. You made some money. Second buy doesn't hit. It's all right. Third buy doesn't hit. It's all right. We're bringing it down. Fourth, it's all right. We've loaded the trade, man. And then what? Bam, tags it. And that is still higher than where you started here. So all these did is give you a setup to run for that, man. That's not a normal, I know. Anyway, in the book we go into much more detail. Much more detail on that idea, man. Now, a lot of stocks right now are set up in that look at this Generac. Straight down. GNRC. Let's see what this is worth. You know there's a hurricane coming, right? Generac GNRC is undervalued and at 31% discount. What if some other stock you're in is undervalued and at a 31% discount? And instead of buying that one, you bought this one. And say they both go up. Stocks, you're not going to get a chance to add to all your stocks, man. If you're like me, I got 77 stocks. I'm not adding to all stocks in every pullback. It's just not possible. So I'm playing, different things because they're going to move up and down together, man. Most stocks are going to move up together. Most stocks are going to move down together. And then you're going to get a few opportunities in there where they went too far and they went too high. So when growth stocks turn, a lot of growth stocks are going to turn. But some are going to be the ones that are starlets because they've just done better. And let's say you come across one of those, you could buy it and you don't have to stick with the other one. So you have that option and flexibility, man, or pick it up with new money. Just keep that in mind. Sometimes people feel married to a stock. It's like they have to make the money back with that stock. It's like, no, you don't. So look at Generac, get smashed. Look at this move down. My God. And if you know anything about the money flow, one of the things I'm looking for to tell me I've hit a bottom is that the RSI goes extreme, and then I'm looking for what? The MACD to tick the other way. Though all that's telling me is momentum has stopped. And the quicker we could have caught that, we could have caught this intraday if we were watching that close, but bam, it did it right there. So now what? I got a pivot point. And if this is a stage 1, 2, 3, 4, now we're going 1. The lower on the 1 I can get this if I was trading. I mean, would it be hard to believe that it bounces up to here, which is previous support, right? Previous support becomes what? Resistance. If you've studied technical analysis much, you know that. And you see what? Look, stop there before, price runs up, it stops. It does it to the upside, it does it to the downside. Is it perfect? No, but it stops in those ranges. And when it stops in those ranges, that's what creates what they call support and resistance. And it's not perfect, but you'll see it, and it's just in these general. And the more, once it does it, I'm usually like, once I've got 3 of them, game over, man. That's a level, that's established, that's support, that's resistance. Same thing with down here, man. If once that just because this breaks, I'm like, well, shit. If the next day, well, shit, it's back, then I know, okay, it wanted to be here. Excited, it runs up for 2 weeks, and then, oh, shit, bad news, stops. Wait a minute, let's see what they're going to say. Day. Oh, wait, they said something bad. Let's go down. Then what? Goes too damn close. Wow, that's too far. And then buyers step in. They're like, wow, that looks good. And this is the fucking chaos every day, man. In and out of the market. And those moving averages, you see them doing this? They're all wacky, man. And all they're trying to do is help us identify it's probably rolled from a 3, which then what? Lets me set up to catch the 1. And if I'm trading, I'm waiting for for me, the way I trade, I'm waiting for that bottom. Once you trade to the short side, you can, man. Trade short. I just like trading to the long side. I can often catch some stocks that are going up, even though the market's going down. But you can trade to the short side. I just find it fucks with my brain. I don't feel as happy. So, but it's short. It ain't no big deal, man. Right here. When you get a big explosion down like that, that's a stage 4 decline, man. That's the money flow rolling over. Just my natural inclination is to let it come in, let it set up, let it go sideways, and then I start buying. That's what I like doing. And that's what's worked for me. Because, in the end, I believe over time it's going up. And so that game is rigged, in my opinion. The other one, I got to be in and out. And if you like being in and out, do it, man. I just got shit to do. And you can see it. You can play both sides of the money flow. You could have one account you just short in. Try it. And you can also just flip it and do reverse indexes. So look at this. This is money flowing. And you could start with as simple as when 5 and 20 cross, Hopefully you can catch it sooner than that. That's what I'm trying to show people. And these are crosses, and it's not perfect, just like the other one's not perfect, right? And so in this scenario, you're a buyer, and you got to stop here. And if the market goes down, what? This is going to go up. And where's it? It's going to stop, man. And then what? Because the market turns and it's going to go down. I mean, go look at a reverse index fund and tell me, does it not do this? It's the reverse of the market. And if your brain thinks like that and that doesn't fuck you up, then you're buying the short, but you flip it so it looks like a buy. Fractals a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over and over again in an ongoing feedback loop. Driven by recursions, fractals are images of dynamic systems. Fractals patterns are extremely familiar since nature is full of them. You already see them every day. You walk outside and it's cloudy. Fractal pattern. Whoa, might rain. Okay, prices breaking above the 20. Might be going up. That's what it looks like. Or breaking below it. Might be going down. That's what it looks like. And so these other parts here are just here to help us, man. But at the end of the day, 71% of the time, it's going up.
We had an enormous economic recovery, but the minds of people had been so scarred. The memories parents told their children. 1929.
Scarred. They've been scarred. So, and I believe that because in 2008, after the housing crisis, I'm buying stocks. My dad, like, are you crazy? Nobody wants to buy stocks because our stocks had fallen 60, some of the tech stocks 70% down. So you don't want to buy Amazon on sale for 70%, right? And I'm telling you, people say they'll do it. They won't. People don't. Very few people. The only people that do that buy into chaos, are the men. They have trained themselves. They have been preparing. It's kind of like, well, nobody wants to go to war except Marines. Fuck you think they're waiting on every day? What do you think the Army's waiting on? We're doing this for fun? You don't think, man, I remember we got activated there were a lot of people that were happy. You're like, man, that's fucked up. I know, they're paying them to be that way. This is a group of people that are different than you. You want to be a guy that's going to step in and buy stage ones and lows and buy fear. You're going to have to train your brain, man. You can't be like other people. You have to train your brain, man. You have to train your brain, man, on this stuff here. What this does, it doesn't even matter if this is fucking true. You could make up something else. You'd be like, well, anytime stock is below the 200 day, I start buying. Okay, do that and do it all the time, over and over and over and over, and don't stop. And guess what happens? You get rich. It's already shown. They can show you with math. Well, if this old lady would have started putting money, that's true. What the money flow is compressing that. Well, if that works in 40 years, let's do it in 8. They're like, what do you mean? 8. Put me on the 8-year retirement plan, please. What's that look like? So next time you meet with HR, tell them, hey, I want to be on the 8-year plan. Like, what do you mean? Put me on the fund that I retire in 8 years. What does that look like? He don't know. He ain't ever run the numbers for himself. He don't believe it's possible. It is, by the way. I've seen plenty of people in 8 years or less invest themselves to financial freedom. Now, is that everyone? So when they tell you past performance is not indicative of future results, I know. No shit. But guess what is? People's minds. People get scarred, dude. When a big something happens, it fucks them up. So I'm telling you, all the way until like, I don't know, 2018, people would be like, do you think housing's going to crash again? And I'm like, dude, that was over a decade ago. I would meet people like, man, I used to own a bunch of properties and then, fucking got wiped out. And I'm like, wiped out? When? What do you mean? And they're like, in the housing crisis. I'm like, bro, that was in 2008. That's a fucking decade ago. In a decade? It's been going up since. And I realized this thing's rigged, man. It's all rigged. Periodically, they on purpose blow out people. The Federal Reserve on purpose is raising interest rates. Your own government is burning it down. They're going to stop it. And so if you're positioned wrong, what happens? Right? So you got to play, you know, your own government's slowing it down, man. They'll be like, I'm mad at Tesla, man. My money. Tesla didn't do it. Federal chairman did it, bro. He's the one that took it down. Let's look at Tesla. When's the best time? I don't even own Tesla. When's the best time? I should own Tesla, probably. When was a good time to buy Tesla? Just looking at this chart. It's 275 now. On a perfect day, when would you prefer to have bought it? Let's go to the absolute perfect day. Now, you're like, but this is looking backwards. I know. Just do the shit forward, too. So flip it. That's the thing, man. It's the bipolar nature of if you flip it, high tide, low tide, love, hate, if you flip it, it's the same pattern. 1 is a 3, 3 is a 1, man. Draw it on a thing and then flip it. And you say, well, you can't flip it. Really? Look at SQ. Right? Look at the opposite index fund. It's the same pattern, man. Except the 1 there is a 3. 3 is a 1, man. Up is down. You know, it's only going 3 ways, up, down, sideways. You know, that's it, man. That's this. And so as I watch it, and if I know people overreact, if I know there's fear, if I'm just looking at this, if I just handed it to a kid and said, hey, when's the best price to buy it? They'd all be like, well, right here. Okay. So let's see if we can get some common denominators. Yeah, 5, 10 crossed. 20. Price stayed on this side of the green line for a long time. Yeah. Oh, wait, let's watch. Oh, look, RSI. Yeah. It's extreme. So on the 2 extremes, we're looking for a bottom. All right. Did that hold? Now, if you've taken my course, you know that's not a buyable bottom. Look how wide these are. Price can't do anything until that comes together. When they're that wide, you got plenty of time. You can finesse this. Nibble, 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 nibble if you wanted. But I would let it set up. What do I mean by set up? Things start coming together. They come together. Now we got legit pivot points here, right? And then what? We got big moves. And where did it stop? Exactly where it stopped before, man. It's pretty wild. And it's funny, if you draw it out, look what happened. Stop there before. And you're like, what do you mean? These box zones, man. These box zones that you see, those become the support and resistance, man. Same on the way down. So on the way down, it doesn't mean it stops it for sure, but it stops it. Look where it's stopping at there. Probably build it out. It may break and go down. Where'll it go? Where it stopped before. This one was a little wider though, man. So it'll come down into there and it'll stop. And as it does that move, you're going to see it following this direction of price. Well, if I'm an investor and I know value, or I just want to take advantage of other people's fear, right?
Mine became a symbol in people's minds. I mean, if you said 1929, it was like saying 1776 or 1492. I mean, everybody knew exactly what you were talking about. In 1929, my dad, who was 26 years.
We got one of those now, man. Social media don't even let you say the word. They'll put a little fucking government warning on your shit like you committed a crime. Oh, he said the word. Anybody that says that word, we got to flag them. Ain't that some shit, man? They got me afraid to say it, or they'll take your account down. Ain't that crazy, man? Fucking land of the free. So, you guys have that at work? You're not allowed to say the word? Oh, that's not a word we say. We don't talk about that. So here's Tesla. Not really down that big, man. Let's look at Amazon. I'm trying to find a good one. Ooh. Ooh. Look at that. You see why I tell people don't buy IPOs, man. That's for suckers. IPOs for the suckers. Don't buy IPOs. Don't let them do that to you, man. And you say why? Because you control your money, man. You're not chasing the crowd, man. Any stock that IPOs is a lot cheaper now. Any of them that but I wanted some. You don't need it, man. You don't need it. Just wait. It's going to set up for you. All of them IPO run up for a minute in a frenzy, and then they sell off, and everybody realizes, wow, no wonder they IPO'd. This thing is shitty. That's usually what happens. And then because of corporate governance and shareholders, they pressure them to fix everything. See, the dudes before cashed out, man. They got their money and left. They didn't come back in and buy shares. They got it all. So now we got to make this thing valuable, and you'll see those stocks move in. And look, you can. I don't even know what we're looking at here. What are we looking at? Oh, Amazon. And you see the pattern, right? Sideways up, sideways down. So now as we're watching, the way we take advantage of the down is we're seeing it being built out, man. So I start watching this RSI. Is it set up yet? That's the first thing. Then I'm going to drop down to the momentum. Where's the momentum on this? It's still to the downside. Nothing to do. Next one, move, If I'm watching Amazon right now, I'd be taking notes. Okay, let's talk about a trade, man. Let's talk about a trade. What about That's weird. I had a phone call. What about you might look at an options trade, right? And you're buy and hold, you're looking at it, it's possibly setting up. We're at 30 here, 31. $113, setting up. So we're not there yet, right? With the anatomy of a trade. So this is a good example to stay with, man, in the week. Let's watch this set up. And what you're looking for is I'm looking for this just to tick the other way, right? And that's not full confirmation. Then we're going to get a breakout, right? Maybe. And it's coming right into a zone. So we have a bunch of these. You're going to see the same chart pattern across different stocks. Where you can affect yourself the most is the stocks that you pick up, of course, right? So one guy can be running the money flow, doing exactly what I'm doing and way outperform me because he catches a stock that does what it does, man. It runs through it. And if you play it perfect, then you get paid, man, right? And that's the thing. And you can play it a lot of different ways, for buy and holds. I'm just waiting for these stage ones. Do I have to wait? No, you don't have to wait, man. If it goes extreme and you're a buy and holder, there's people who be like, yeah, man, I'm going to pick up the Dow. I got a lot of buddies that do that. That's the bottom, bro. And they'll be like, okay, we got an anchor point. I'm buying the fucking anchor point. Because they're trading the same as me. They're doing the money flow, and they're trying to grab the absolute bottom. If it goes lower, probably buying again. And once you start finesse buying like that, you could buy one share. Say you want to put $1,000 in here. You're like, dude, let me get 3 shares. It takes me down to 900. Let's say I'm trying to get 1,000 in there, 500 in there. And you got to do it in one day. And if price holds out tomorrow, I pick up 5 more. Right? What am I expecting? That this is the stage one. Might not be the one, but after a big down move like this, let me in on this. If I can get in on this every time, right? If I can get in on that every time, over time, it's all right. It's if you believe that Amazon's going to keep going over time, that 70% of the time they go up, man. What this does is give you time, because look, that was back in July. God damn, by November we can't come up with a couple bucks, man. So, you got 20 of these. I mean, Amazon is a good one, dude. What in my day, I say my day like that shit was 10,000 years ago, but when I was first building out my portfolio, it was Walmart, man. Walmart, dude. But this is like 2005. Let's go back to the Walmart now. Let's take it back. I mean, look at this. I mean, coming off the crash, man, Walmart was like 30 bucks. Well, before that, it was like $100, man. We've had a lot of stage ones in here, man. I stopped buying. I was buying on this for 5, 6, 7 years. The position got large. I was like, well, fuck, man. I'm not, instead of buying Walmart, man, I'm going to pick up blah, blah, blah. And then that was it, man. Me and Walmart are done. It's set on to buy shares and just part of my holdings in life. And my share count just grows as they pay dividends. If it drops way down here, maybe I'll add a few shares to it. But there's plenty of stocks that I don't even do that anymore. Pepsi, BX, because the prices of they're 20, 30, $40,000 of it. I mean, it's like, well, how much fucking Pepsi do I want? You know, so why don't I just leave it? And this crash that happens here, let me target Coke. Now I got Pepsi and Coke. I don't have to add to Pepsi just because prices are down, right? If I have no intention of selling it, and if I'm trying to build out a portfolio, and as I'm doing that, I'm watching the money flow, right? And you know, some of my favorite is just the dogs of the Dow, man. Where's that list? This is at a core of my. I wish I could get people to comprehend this. I don't know if you noticed in the newsletter, I drop in smaller videos in here that I think are on the millionaire idea. But these stocks right here.
Years of age then, was employed as a security salesman by a local small bank. He sold stocks and bonds, but he mostly sold stocks. And when stocks fall 48%, and you were selling them to people a few months ago, you really don't feel like going out and facing those same people. So I think my dad...
Man, you don't feel like going live after telling someone to buy a stock and the stock's down 50%? Why not? So his dad didn't feel like going to work, man. Yeah, no shit, dude. I know the feeling, bro. So these here, Dow, Verizon, IBM, Chevron, Walgreens, Merck, Amgen, 3M, Coca-Cola, Intel make up the 2022 list of Dogs of the Dow. Dogs of the Dow is a strategy that could just be, it's a wonderful stock strategy. You could just store money there, okay? But you got to believe that 70% of the time stocks are going up or you'll fuck this up. These stocks pay you dividends. Look at that yield, 4.5, 4, 5, 3. This is not your return, by the way. That's the cash flow for earning these. Now, most of us set it to drip so that it buys more shares. Shares buy you shares. So as you're watching these 10, and if you watch what I have hundreds and hundreds of thousands of dollars stored in these stocks here that fluctuate up and down, forever going through the money flow. And notice the dividend yields. They're much higher now. So it was $56 when I put it in the newsletter that day. And I said, I would love this stock right here. Look at the price today. $43.
48%. And you were selling them to people a few months ago. You really don't feel like going out and facing those same people. So I think my dad probably, I like to do as they say now, shelter in place, which means stay at home. And there really wasn't that much in our house. We just had a small yard. It was wintertime anyway. My dad wouldn't have been puttering out the yard anyway.
That's not true at my house. Warren says his dad didn't want to face the people he had been telling to buy stocks that are down 50% now and look at them and go, yeah, you should keep buying stocks. He didn't want to do that. So he hid in the house. It's not that bad at my house because I got 3 houses. So I just go visit my houses. Yeah, they were, broke. This recession's a little different. This recessions move faster. So the drops move faster. Used to, a typical bear market would last 18 months to 2 years, where you'd have stocks genuinely just move lower. You'll have, and you'd be like, how long does this happen? Means, listen to what I'm saying. You got 2 years. If I looked at you and said, how many stage ones is that? I get deer in the headlight looks. I've never had a fucking trader answer this question. And they go, what do you mean? I said, if we went genuinely down with some big rallies up and then down and then some big rallies up, right? So rallies up, down, and this continues for the next 2 years. When do you quit? And how many stage ones is that? It's like, you've never looked to see about genuinely how long a stage lasts. So looking back, perfect history, that's about 2.5 months, right? How long was this stage 3? This is about a month, maybe a little less. What about this one? How long was that one? Let's see. It was about 3 months. You catching on to something here? How long was this one? They typically last about, that's about a month. They last a month to 3 months. It's 3. What about stage ones? And we could go back and look. And based on that, we could come up with a common focal, we could use a moving average on it. And we could say, we're probably getting 3, maybe more, 3, 4 stage ones in a year. In a year. Maybe more than 4. But you're going to get about 4 stage ones. So if I own those stocks, on average, I'm going to get about 4. Now, some stocks are going to give you a few more, and some are going to give you a few less. Some are going to get hung up and go sideways for 3 months, and you have 3 months that you could have been banging Verizon, banging Verizon, banging Verizon. And you're like, well, I don't know. And you're like, no, this is the strategy, man. You own these. They pay you money, and you watch for the stage ones to add new money. And you just keep banging that forward, man. And when they turn and start running, let them run. That's when you add other stocks to the thing. And let's say all of these are running and you have new money. Well, if it's me, I go look for a good company in a stage 1. And now I've got 11 stocks, and then 12, and then 17, and then 19. And when they all turn down, okay, let's see what's up. I look at my 19, I'm looking to add there, right? And so typically I add new stocks when the stocks are going up, and I add to old stocks when stocks are going down. You say, why? Because when my stocks are going up, I'm usually not adding to them. Make sense? So typically new stocks tend to come in when I'm doing pretty good, because I'm trimming the stocks that run up. I'm trimming oil when the RSI is 70, right? If I have new money, or if they say it's fairly valued and we're playing this game, if it's fairly valued or overvalued and it's banging a 70 RSI, I'm usually trimming. I'll sell a few shares, right? Why? To help me buy some shit down here, which typically, if the market's going, it's going to be new stocks that the company's messed up. And I'm like, oh, there's my shot at Generac. Like Generac was too high for me last time, right? And everyone tells me they want to do this, but very few people do this, because when it does go down, they're crying about the other stocks they bought, not the opportunity to get the new stocks. And you're like, let me say that again. A lot of times people get upset because the stocks they own are going down. And I'm like, yeah, but now you get to buy cheap ones. You're not fucking selling these for your anytime soon, are you? And if that's the case and you believe it goes up, then what you have left is an opportunity, man. And if it, that's the only way we can see it, man. Otherwise you lose.
And there really wasn't, television wasn't there, and he and my mother got along very well. So under those conditions, I was born about 9 months later, so I didn't notice at the time that the market was closed. But the stock market had actually recovered over 20% during that 9.5-month period or thereabouts. People did not think in the fall of 1930, they did not think they were in the Great Depression. They thought it was a recession, very much like had occurred at least a dozen times, although not always when stock markets were important. But then we'd had many recessions in the United States over the time, and this did not look like it was something dramatically out of the ordinary. Actually, for about 10 days after my birth, the stock market actually...
Warren just said over 10 days. That's Warren Buffett, by the way, richest man in the world. One of the most successful investors ever. Way more successful than your dad, grandfather, or cousins. You don't have a single friend on planet Earth that's more successful than that man. And he drops bombs on the stock market all the time. Like saying that over time it goes up. He believes that shit. Okay? I don't know if you do. You got to ask yourself. I know if I don't, it doesn't work. That's why it's called Sunday service. It's a religion, man. It's the only way it works. It's the only way. Otherwise, you're just going to get lucky. You might get in, bounce, grab some money, and get out and go do something else. Maybe you pull that off, and that works good, right? But if you want, like, well, we'll see. A price chart is a sequence of prices plotted over a specific time frame. Price is the indicator, by the way. Right here, I use bars, you might use candlesticks. These are the indicator. This is the emotion. This is the human emotion of millions of people coming together. And they decide as a group, bam, 8:30, bam, this is where we open on Monday. Bam, this is it. Because price is a social agreement, man. If you got my new book, Two Selves, I talk about this, that price, it changes, man. It's not based on shit. They're like, oh, it's fundamentals. Yes, ultimately it is fundamentals and openly over time, but it swings like on this pendulum from overbought to oversold, and it goes back and forth a lot like you do, a lot like I do. Where a minute we're happy, next minute we're not, and we're worried, and then we're panicked, then we're happy. That's price, man. It's up, down, up, down. It's chaos, man. It's chaos. It's chaos. That new ebook I'm talking about, I call it Chaos to Cash. It's chaos. But how do I turn people's chaos into my cash? And realize that I'm not in control, man. So these are stocks that I own. And I'm not in control, man. I'm not in control where they go.
Managed to go up all of 1 or 2% there in those 10 days. Well, from that point, the stock market went from level of 240 to 41, which was a noticeable decline because if somebody had given me $1,000 on the day I was born and I'd bought stocks with it and bought the Dow average, my $1,000 would have become $170. And
$1,000 the day he's born becomes $47. Sounds like it's happened before. A lot of times, right?
In less than 2 years, that is something that none of us ever experienced. That we may have had it with one stock occasionally, but in terms of having a broad range of America marked down 83% in 2 years, and marked down 89% of the peak was in September 3rd, 1929.
What are you doing? What's the plan? You buying that? You buying down 87%? Is that you? Are you taking advantage of it? Or are you wiped out? Did you blow out, man? We can't blow out in that. That's the money flow, man. You can't blow out in that, man. So in the first ebook, You Don't Have to Die Broke, I talk about this, man. I can't blow out, man. I got to structure it. That's what the buckets are all about. Chapter 1 is entitled The Money Flow, meaning the flow of money in your life from your job to this, to these, you know. And this is just the stock side. And I say there's 3 ways in America, baby. 3. You can own a business. You can invest in business. That's what this is. Or you can own real estate. That's it. So if you have a job, you got to pick one of the other 2, man. You're either going to invest in business, you know, you're going to invest in business, or what? And if you watch, keep up the newsletter, those numbers there keep going up. So this is the number that I'm watching more than anything. What is that? That's the income off of these in that game, in this long-term game. In the growth game, it's that over time it's going to grow higher. And you have a choice now to take advantage of it, add to them or not. That's up to you, man. But this doesn't pay me a dividend. And also, don't have to add to it today. You know? I don't have to add to it. It could come up $20 and I add to it. It could come up $30 and then go another $100. Like, you're not forced to do anything. So you make the decision that you think is right for you right then. So let's say you were non-diversified and the market got hit. You don't have to buy growth stocks. You could fucking fix the problem and start diversifying right now. You can decide tomorrow to do this the right way, the way I should have done it then. And you start adding new asset classes. You know, you start adding things. You're like, man, I wish I'd have had that then do it now. Like, fix it from here forward and play it every day going forward is it the way you're supposed to, man. Or whatever, how that's defined for you, man. So, this Generac, man.
It was extraordinary. And in that intervening period, less than 1 year after I was born, just slightly less than 1 year, my dad went to the bank where he worked and had his account. And of course, the bank had a sign on it closed. And so he had no job. He had 2 kids at that point. His father had a grocery store, but Charlie and I both worked for my grandfather. Charlie worked there in 1940. I worked there in 1941, so we didn't know each other. But my grandfather said to my father that, don't worry about your groceries, Howard. He says, I'll just let your bill run. That was my grandfather, not exactly.
I've listened to this hundreds of times, hundreds.
Cared about his family, but he wasn't going to go crazy. And one of the things as I look back on that period, and I don't think economists generally like to give it that much of a point of importance, but if we'd had the FDIC started on January 1st, 1934. It was part of the sweeping legislation that took place when Roosevelt came in. But if we'd had the FDIC, we would have had a much different experience, I believe, in the Great Depression. People blaming on Smoot-Hawley here, and there's all kinds of things, and the margin requirements in 29, and all of those things entered into creating a recession. But if you have over 4,000 banks fail, that's 4,000 local experiences where people save and save and save and put their money away, and then someday they reach for it and it's gone. And that happens, in all 48 states, and it happens to your neighbors, and it happens to your relatives. It has to have an effect on the psyche that's incredible. So one very good thing that came out of the Depression, in my view, is the FDIC, and it would have been a somewhat different world, I'm sure, if the bank failures hadn't just rolled across this country, and the people that thought that they were savers found out that they had nothing when they went there, and there was a sign that said closed. So the Great Depression went on and lasted a very long time, but it lasted a lot longer in the minds of people than it did actually in its effects. World War II came along, and on sort of an involuntary manner, we adopted Keynesianism. We started running fiscal deficits, of course, that were absolutely huge, and took our debt up to a percentage of GDP, which had never reached before and never reached since. So we had an enormous economic recovery, but the minds of people had been so scarred, the memories parents told their children. 1929 became a symbol in people's minds. I mean, if you said 1929, it was like saying 1776 or 1492. I mean, everybody knew exactly what you were talking about, and it affected stock prices in a rather remarkable way. It was January 4th of 1951 that the kid who was born on August 30th in 1930 had finished college before the stock market got back to where it was at that earlier time. So take the years from 1920 or 1929 to 1951 and bear in mind that, the country was only 140 years old when this started. That's 20 years out of this amazing 231-year lifetime of our country. That was flat out a time for a long time of no economic growth and no feeling by people in terms about the wealth of the country, about what the American economy was worth, what all these corporations that were doing far better than they were long ago. But it took all of that time to restore in the market a price level that was equal to what it was when I was born 20 years earlier. So if you think about the fact that we're enduring a few months, and we'll endure many more months, and we don't know how it comes out, and people in the 30s didn't know how it was going to come out, but they endured, persevered, prospered, and the American miracle continued. But it's interesting in that at the start of 1954, the stock market the Dow was only at about 280. And I remember 1954 because it was the best year I ever had in the stock market. The Dow went from 280 or thereabouts at the start of the year to a little over 400 at the end of the year. And as soon as it went across 381, that famous figure from 1929, when it went to 400, everybody wondered, is this 1929 all over again? And that seems a little far-fetched because it was a different country in 1954. But that was the common question, and it actually achieved such a level of worry about whether we were about to jump off another cliff just because the 381 of 1929 had been exceeded, that Senator Fulbright, Bill Fulbright of Arkansas, who became very famous later in terms of the Foreign Relations Committee, but he headed the Senate Banking Committee, and he called a special investigation. He really was questioning whether we had built another house of cards again. And his committee, in March of 1955, with the Dow at 405, assembled 20 of the best minds in the United States to testify as to whether we were going crazy again. The Dow was at 400. And we'd gotten in this incredible trouble before, but that was the mindset of the country. It's incredible. We didn't really believe America was what it was. And my boss, the reason I'm familiar with this, was that I was working in New York for one of the 20 people that was called down to testify. And I remember, because Ben Graham was one of the 3 smartest people I've met in my life, and when he testified, the Dow at 404, he had one line in there right toward the start in his written testimony, and he said, the stock market is high. It looks high. It is high, but it's not as high as it looks. And since that time, we felt the American tailwind at full force, and the Dow, when we made the slide, it was about 24,000. So you're looking at a market today that has produced $100 for every dollar. All you had to believe in America, just buy a cross-section of America. You didn't have to read the Wall Street Journal. You didn't have to look up the price of your stock. You didn't have to pay a lot of money in fees to anybody. You just had to believe that America was intact. But you'd had this testing period between 1929 and certainly 1954, as indicated by what happened when it got back up to 380. You had this testing period, and people really had lost faith to some degree. They just didn't see the potential of what America could do. And we found that nothing can stop America when you get right down to it. It's been true all along. It may have been interrupted with the scariest of scenarios when you had a war with one group of states fighting another group of states. And it may have been tested again in the Great Depression, and it may be tested now to some degree. But in the end, the answer is never bet against America. And that, in my view, is as true today as it was in 1789, and even was true during the Civil War and the depths of the Depression.
Yes, man. Hey, I appreciate you guys listening in. My name's Gerald.
Every year, 40,000 people travel to Omaha, Nebraska to listen to investing legend.
I had that going. Anything I can do to help you, just let me know. Hey, man, if you're in Houston, I'll be at the ZZ Top concert tonight. If you're there, send me a DM. I'll be there with my good friend, the Wolf of Houston, checking out the show, probably from the side of the stage. So I hope so, man. I used to love those dudes when I was a kid. Jeff Beck will be there too, so it's an old school.